Coming up in today's video, we'll be talking about gold, which just hit $3,400 an ounce for the first time in history, up 2.74% today. And Trump slams Jerome Powell as Mr. Too Late calls the Fed chairman a major loser. And the market absolutely hates this as the dollar continues to sink lower as faith in US denominated assets and securities are under a lot of pressure. In today's video, we'll be taking a look at indices, we'll look at gold, we'll look at crypto, commodities, the dollar, and much more. All I ask is that as we get started, hit the thumbs up button and subscribe if you're new. So first of all, let's talk a little bit about gold, which continues to hit new milestones. It seems like every single day. Trading at $34.15 an ounce at the time of recording this. You guys know if you've been watching the channel that I am still in my long position, and I've trailed my stop loss again this morning up to $3,274 an ounce. On a price action basis, we still look really strong here, basically taking out Friday's high and continuing to push higher. And I think a lot of this is the drama between the two superpowers that are Jerome Powell and Donald Trump. The president is adamantly frustrated with Jerome Powell for not cutting interest rates when he believes that inflation is beaten and should be seeing interest rate cuts at this time. And he even accused Powell of meddling with the election because he basically pointed out that he cut interest rates quickly when the election was upcoming between him and Biden, and then it switched to him and Kamala Harris, and now accusing Jerome Powell of being too late for not wanting to cut interest rates now. Are there some politics at play here? Maybe, but I also do still see the perspective of the Federal Reserve not wanting to cut interest rates too soon, with inflation still working its way down. To Trump's credit, we do see inflation coming down here in recent times, but we're not quite at the Fed's target inflation rate of 2%. If we hover over this latest data, you can see that the forecast was for 2.6% year-over-year inflation. We actually saw the CPI come in at 2.4%. Another concern here is that inflation may be coming down partially because oil prices are coming down, which again can be a temporary thing and could be derailed at any point if oil prices were to spike on geopolitical uncertainty or OPEC doing something. Essentially, the idea here is inflation is down, but is it down because of slowing demand and cooling inflation factors that are sustainable, or is it down simply because the price of oil has dropped, which plays a considerable role in swinging prices back and forth, as many will know, simply because the core CPI excludes energy for this reason. But to point out fairly here, core CPI has also been coming in soft, which excludes energy prices. So should the Fed come off of their pause mandate and start cutting interest rates? Maybe, maybe not. But again, the concern here is that if you cut too soon, it could cause a rise in inflation, and people are worried about that. But one thing is a clear winner in all of this, and that is gold. Institutions have been hoarding gold for the last few years, as we can see in the COT data history tab within the Edge Finder. Going back as far as 2023, you can see net institutional positioning rising over time as more and more institutional buying took place. And that has obviously been an exceptional call considering gold has been a monster uptrend for the last few years. And with the VIX still at elevated levels, currently trading around 33.6, volatility and uncertainty is very high. The dollar index continues to sell off, and even bonds are not acting as their typical safe haven nature would suggest. So let's straighten this out. US stocks are getting sold, the US dollar is getting sold, and US treasuries are getting sold. All of that to say, gold is behaving so bullish because as an alternative to US investment, it's looking really attractive. Now, one thing about Trump, whether you like him or dislike him, is he has big calls, big plans, big predictions, and things that he wants to get done. Will he get that stuff done? Maybe, maybe not. But one thing is for sure, there's a lot of uncertainty. So we don't know what the future is going to hold. And the market seems to be making a little bit of a defensive play, buying things like gold and selling out of US stocks, US treasuries, and US dollar, simply because the uncertainty surrounding all of this trade war stuff makes investors unwilling to hold US assets. Especially the bond market stuff, that is especially concerning, since usually people would be buying bonds in an uncertain environment, but because the US and the administration is centric to the drama right now, people seem to be selling everything US. Again, making gold that really attractive alternative investment class. Now, all the stuff that I just have been discussing here has been reflected in the Edgefinder's top setups bullish reading that we've gotten in gold in the last few months. And in fact, what you can see here is on the Edgefinder's score history graph, gold has been getting a bullish or 5 or greater reading for the last several months, signaling that, again, more upside could continue to come into an environment like this for gold when people are highly uncertain and the dollar looks weak. And if you don't have a copy of the Edgefinder, there's not been a better time to do so all year long. We're currently doing our biggest discount of the year. You can get 40% off the Edgefinder using the promo code and link in the description down below of this video. With the Edgefinder, you can unlock access to tons of economic data, sentiment data, as well as not just crowd sentiment, but also institutional positioning through our COT data graphs, and much, much more. If you don't have a copy, find out information in the description below. Also, if you send us a direct message using the first link in the description below, you can actually contact our support team, ask any questions you have about the tool, and for doing so, we'll give you an additional 5% off the tool. It is a one-time price for access. So with the VIX trading at 33.6, what does that tell you about market forecasts? Well, it tells you that the market is expecting high levels of volatility. As opposed to periods of low volatility where we're not expecting to see big moves, right now, the market is very much expecting to see big moves out there, whether it be indices, commodities, or currencies. Speaking of indices, we'll take a look at the NASDAQ here. You can see we've been continuing to put in some lower highs and potentially questioning whether or not we'll see some lower lows on this move. We've seen resellers come back into this market environment around the 19,200 level. After that big pop on that Wednesday, we didn't see any follow through. In fact, we've seen this thing fizzling out and now actually breaking through some lows of support. If we drop down to the 4-hour time frame, what you can see is this key level of support on the 4-hour chart now seems to be getting broken. We'll see how the candle closes today. If you get a break back higher and a wick on the bottom, that actually could be a sign that buyers are trying to get back involved. But if you see a strong close below this key level today, that could signal that sellers are in control and we may actually be headed back down to retest those lows around 16,500 on the NASDAQ. And you can see this is actually even more pronounced when looking at the S&P 500. We're sitting right around that level of support. Let's see if we get some sort of strong closure below that today to signal that sellers are back in control and may actually take us back down to those lows here. In this case, that low being around 48.50 on the S&P. Despite the sell-off in indices, we actually see a little bit of a breakout potentially forming on Bitcoin, which is really impressive considering usually this thing follows suit with the indices. We've been seeing a slight divergence in that in recent times where indices have been getting sold heavily and Bitcoin's actually been doing okay. Maybe Bitcoin is just a little tariff resistant. From a perspective here, let's see if we can get a breakout and retest. I actually would potentially get interested in taking a long position on Bitcoin if we get a strong break above resistance here. And you can see Bitcoin is actually a bullish setup within the Edgefinder at this time. The dollar yen has also been getting a bearish reading on the Edgefinder for some time. And you can see this chart has just been falling apart. I've really wanted to be on the short side of this move, but unfortunately did not get the pullbacks I was looking for. If we do see a retracement back up into maybe this 147 to 148 level, I'd be interested in possibly looking for some short setups. Same thing on the dollar Swiss franc. I am bearish on this pair, but waiting for some sort of pullback. Just taking a quick look at the latest COT buys and sells, we can see the biggest buys were the Nikkei, the Canadian dollar, the NASDAQ, Platinum, Russell, the Kiwi dollar, the Japanese yen, 10-year treasuries, Swiss franc, euro, and oil. And on the sell side, we see silver, Bitcoin, copper, dollar, Dow Jones, pound, the S&P 500, the Australian dollar, and the South African rand. On the currency side, I am interested in euro dollar longs if we can get some pullbacks down to this area here, that level being around 1.1270, let's call it. I'm interested in the pound dollar if we get a pullback to 1.31. The Australian dollar trying to break out here. If we get some decisive move higher here and then a pullback, I may be interested in it at this level here. And then the Kiwi dollar around 5,800 looks really interesting on a pullback. A lot of charts right now are moving dramatically in one direction, and being patient here, I'm just waiting for pullbacks. There's not really a whole lot I can do with these ideas, and if they keep going, then I just simply miss the trade. And today's video is sponsored by Maven Funding. They offer instant funding for as low as $19. They have some of the best prices in the industry, and they offer really fast payouts. In fact, I saw on their site that they average like a 1 hour or less payout process, which is really fast. If you'd like to explore more about Maven and take advantage of some of those low prices, you can do so using the link in the description down below. Maven is one of the more well-known in the the industry when it comes to prop firms, and they offer some really good content on their site. You can also find plenty of information if you want to explore the different challenges that they offer, which again, like I said, are some of the best priced in the industry from my experience. So explore Maven, check them out down below in the description.
Let's just say I missed this trade by, 0.5% or 1/4% or whatever on the move of gold. I would be so annoyed, right? And that's okay to feel that way. Like if you're like, oh my gosh, this FOMO is killing me, this is so annoying. But the big difference is I would not act on it. I'm not chasing. I'm not going to short this market angrily, right? Those are things that I've done in the past. Most people probably have. And it's normal to feel that want. If you're somebody who's like pissed that you missed this, right? It's natural to be like, I want to short this thing. Like it's got to come back and then I can ride it back long. Like that, I don't do that. Okay, that's not what I'm doing in this case. What I'm doing is, okay, took an entry, or let's say I wanted the entry and I missed it, right? Step one, I'd be annoyed. Step two, I would do nothing, right? This is important because this is valid. If you're like, the market is making me so annoyed, I missed these moves, this was it, that was going to make my year. Look, you're valid for being annoyed. Is anybody annoyed or frustrated by gold? Can you do me a favor? Type yes or put a 1 in the chat if you are currently annoyed by gold or a chart that you're watching and you've missed some kind of move. If you've missed some kind of move and you're feeling FOMO right now, can we just like have a safe space for a second? Type yes in the chat if you are in that circumstance, because I've been there so many times, and I'm not, rubbing it in or telling you, oh, I have the perfect answer for when. That's going to happen. And it's valid to be annoyed, right? To be like, this is stupid. I missed the move. I was all set up. I was correct in the direction. I missed the move. Step one, valid to be mad. Go punch a punching bag. I'm not even kidding. Like find a physical outlet, take a run, punch a punching bag, work out. I personally think this is my biggest stress reliever as I hit the gym or I go on a run or do something physical and just let it out, because you have to. It's annoying when you miss a move. Like nobody's gonna, well, some YouTubers will tell you, oh, just trade like a robot. Don't feel that, bro. And I'm like, no, that's annoying. It's annoying when you miss the move. Step two is do nothing. You can't do anything about it. You can't change it. You can't control the markets. But one of the biggest mistakes I see most people, myself included, doing in the past is wanting to now short this market because this is stupid and I missed it and I'm mad, right? That's a silly mistake that a lot of people do. So the real diligence and discipline is to do nothing and to just wait. Wait for a pullback, wait for a proper setup, wait for your system to produce the next opportunity, move on. That's all you can do. It's annoying, but it happens to every trader. The best traders in the world have that happen to them. In this particular case, this trade, I got it right, but I don't always get it right. Sometimes I'm early, sometimes I'm wrong, sometimes I miss it. It's very, don't let anybody tell you that trading is easy. It's really hard, and it's really frustrating when that happens. So if you're feeling frustrated, you're valid for feeling annoyed, but don't act on it. That's where most people get it wrong. They're like, no, I'm going to either chase this market because otherwise I'm going to just miss more of it, or they short it because they're angry that it's gone so far without them. Don't do that. I'm telling you, you're not trading with a sane mindset. You're trading with revenge, you're trading with anger, you're trading with all that stuff is going to get you in trouble, because not only you're going to do it you're going to likely do it with too much size. You're going to short this thing aggressively, and then when it rips, it's going to blow your account, right? Be careful, okay? If you're in the move, manage your trade the way your system tells you. For me, that means trail a stop. I'm in the move. I'm going to keep trailing, keep locking in more profits until I eventually get taken out. If you're not in the move, sit on your hands and wait. That's the only answer. It's not a fun one, but it's the answer. That's the only thing you could do. The two things my go-to things that I do when I'm frustrated with FOMO or I'm in a losing streak is some sort of physical exercise. And I like to play chess.com. Like I go on chess.com and play games of chess because it gets my mind on something else that's highly critical thinking, right? But staring at charts is just going to get you in trouble. So don't do that.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.